You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you're enjoying your kickoff to the week here. The markets certainly are up firmly. We'll get to all that in a wee bit, but first, let me welcome on my rotating cavalcade of cohorts. Let's start out over there in the international headquarters of the land of the pit by way of Carmeline Capital, where we are joined by the Greasy Meatball, Mr. Mark Sebastian. Mr. Meatball, welcome back to the program on this strong kickoff to the week today, sir.
Yeah, quite the update today, huh? I guess, now that the yield curve is normalized, we should just go hog wild for stocks.
All is right with the world. That's all it took. That's all it took. Everything else in the world, German recession, Chinese weakness, none of that matters, sir, because all is right with the yield curve again. And that's really the only indicator we need. Also joining us, holding down the Fidelity hot seat, a man who knows a thing or two about his indicators, likes himself some technical analysis, Mr. TREY, a.k.a. the last dad of Krypton, JARRELL. TREY, welcome back to the program, sir.
Yeah, thanks for having me. Glad to be back. And of course, always happy to discuss indicators. Always a favorite analysis and go-to of mine. All
right. And last but not least, it's a high BBI day for him. Glad he could make it on the program. Someone's got to babysit your cash on days like today. Maybe roll some of your puts and some of your covered calls. Uncle Mike doing just that from St. Charles Wealth Management. Uncle Mike, welcome back to the program. Glad you could squeeze us in amidst your many bathroom breaks.
Hey, the only priority that's higher than the option block is the clients, and unfortunately, I'm going to be pulling that card in and out throughout the show today. It's a very high BBI day today, but we'll do what we can. But truth be told, I really do kind of have to go right now, but I can't.
Well, there you go. I can buy you a minute or two, sir. So you do what you got to do as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. It is time for the trading block, the portion of the show where we break down what the heck is trading. Got a new junior producer joining us here, helping us out today on the show, doing a great job here. So keep it up there, keeping the live things rolling behind the scenes here as we dive on into what is trading. We alluded to it today here, just a robust day. If you're in the Uncle Mike camp, you're here in the bullish camp, you're pretty excited because, hey, a lot of green on the screen today. Most of them, all the major indices up well over 1%. The Dow is the laggard yet again, up a mere 1 1/8. And then S&P, the Goldilocks, up about 1 1/3%, and the NASDAQ roaring to the upside, up about 1.6%. Crude oil actually up a bit as well today, so getting a little bit of love across the board. I guess yield curve translates into bullish day for crude. A lot going on weird out there. We'll get to that on TWIFO later this week. Gold, of course, taking a break with all of this upside. And, of course, Vol also taking a break with all this upside, off quite a bit since our last program. We're at about a 17 handle right now. That puts it, about almost 5 handles down from where it was, about 4.5 or so from where it was this time last show. Our old friend VVIX also coming in a little bit. It's down 10 points from where it was last show. It was at a 113, now we're about a 103. And our old friend VXX also coming in about 3.5 handles, down to about 26.5. So everyone who was writing in saying, you know, those Jan 30 puts or so for $6 were juicy. They were. You were right, but getting some of that back here today. So there you go. A lot to parse. We'll start since the man's got to go to the bathroom. Let's let him start first. Mr. Uncle Mike, sir, what is lighting up your tape on this high BBI day?
Well, I think right now this is very much a closing short put day for me right now, which is I think I'm kind of stating the obvious of what people would think on this. We had high vol. We have a rally in the marketplace. Vol comes down, and it's a very happy day in a lot of ways for having to close out the short puts and move on to do other things with it. And I have a lot of them to close out and analyze with this. But with this, I think that this is a news-driven day, and that we have a lot of things going on with Hong Kong right now. And that looks like they're saying now that maybe we'll stand behind Hong Kong and support Hong Kong. So we do have that going on. The other thing with which we have is that it's a yield curve style of day, so that's really big in the news right now as to what's going on with the with the yield curves as they're happening. So I think that we really have a lot going on right now, and this is a volatile market. And combine that with the fact that a lot of the big money is still in the on vacation until after Labor Day, so we have that to work with as well. But when you have the yield curve doing what it's doing, and if the bond yield curve does move lower again, we could resume the downturn in stocks. We got to be prepared for that. So with everything that's happening, at least for now, everything is awesome, but we'll see if it stays awesome.
Everything is awesome indeed, unless you're long vol. Then perhaps, vol products specifically, then perhaps not so awesome. Or gold. Taking a bit of a break today as well. Mr. Trey, you know, the market giveth, the market taketh away. The market's given again today. We're fully back. I'm sure, once again, the phones, the hot seat lighting up over there in Fidelity land. So what's dominating the tape? What are the Fidelity folks? What are they slinging today out there in Fidelity land?
Yeah, absolutely. They've certainly been busy here today. As you go through the orders by Fidelity customers here too, seeing some contrarian points of view from our customer base here today. So a couple of names. Number one today, coming through strong, Apple here. And I know Colin spent some time on this one last week, so I'll make just a quick mention of it. But, up about 5 points right now. But Fidelity customers pretty heavy on the sell side here with 68% sells to 32% buys. So maybe taking advantage of this update to potentially sell some of their shares here. Another one that popped up today, it's been popping up on our list the last few days and in the news. It's been kind of an interesting stock to follow was NVIDIA. And big day today, up 9 points, just under 6% to the positive here. Fidelity customers almost split on this, about 48% buys to 52% sells here right now. But a lot of interesting news in NVIDIA the last few days. They did have our earnings last Thursday. They came through, beat their earnings per share number. Initial reaction, very positive. Some more news out today. They mentioned that a number of video game companies are using NVIDIA's graphics enhancing technology, including Microsoft's Minecraft and Activision Blizzard's Call of Duty. So stock on a nice little pop from there. From a chart standpoint, today's action puts it above, really all of the major moving averages that we follow. Was right at the 50-day last week, but today's move takes it above that 50, 200, and 20-day. The stock had really been contracting down to this point, but this gap up, taking it above this point here as well. Looking over on the option market in NVIDIA, interesting here as well. We see some follow through maybe from the option market here. A little heavy on the calls today, 116,000 calls traded to 59,000 puts right now. So just about that 2-to-1 right on the dot. And, the majority of that call volume coming from the buy side, right? About 40,000 call buyers compared to about 24,000 based off of, trades on the bid. So interesting follow through, there from the option market. Now, keep an eye on that stock's, chart, though. It has had, a little bit of trouble over the long term. If you, take a look at it, it's, had some lows as close as, down to this 130 range where it was at December, right around 135 here in May. So, popping up off of those, it's got maybe some resistance here. Recent highs of around 180 and around a 190 mark. So, be keeping an eye on those levels if it manages to continue up. See if it can get through some of those maybe resistance levels that it's had here as well. So, Microsoft, right? So also in the news based on NVIDIA, also popped up today on our orders by Fidelity customers, coming in at number 8, actually. Fidelity customers, we're leaning a little towards the sell side on Microsoft here. Again, kind of that contrarian point of view with about 64% selling here at Fidelity versus buying. Chart on Microsoft, right? We know what's happened with this one here over the longer term, right? It's had this big, strong uptrend here. Pulled back a little bit from year highs, which are right around this, 142, 143 range. Stock sitting at 138 right now. But still continuing this upward trend above all of its, 50, 20, 200-day moving averages here with the move today. Looking for maybe the next potential level, that resistance point, right? It's going to be right at those year highs. What I thought was fairly interesting on Microsoft today is just looking at the options activity. So this is a stock 90-day average volume in the option market, about 190,000 today, just under 270,000 contracts traded today. So a little heavy here today and very significant on the call side. So 230,000 calls showing right now compared to 38,000 puts, with about 102,000 of those calls on the ask, 89,000 on the bid. So, very skewed on the call side here on that call put ratio today. So certainly something interesting to pay attention to. See what the follow through is there. One last one I wanted to mention, been keeping an eye on this one, been pretty steady on our list of orders by Fidelity and actually came in at number 2 today, which was AMD. Another update here for this one, up 66 cents here right now. This stock, really kind of an interesting one when we talk about these resistance levels. If you didn't believe in that portion of technicals, this is the stock that shows you that it is important. If you look at this $34 to $35 range, every time it hits there, it's had this strong reversal. So not quite there as of yet, but today, again, breaking above some of those moving averages, breaking above its 50. It's held its 200 for a while, breaking above the 20. If this continues up, see what it does at that 34, 35 range. It's really had a lot of trouble in those areas. The last 4 or 5 attempts it's gone through. On the option market in AMD, really heavy on the calls here, about 130,000 calls to 54,000 puts right now, with a little more on the buy side, about 50,000 to 44,000. So you see some strong options activity, here as well. So Last quick thing I wanted to take a look at here is just at the S&P too. So certainly been an interesting couple of weeks to say the least. But really what I'm keeping an eye on right now, the S&P's been kind of stuck in this range in between the 50 and 200. Today's up move puts it near this level. We're at 29, about 29.28 right now. I see this 29.40 level. Sort of been the interesting resistance level last couple of weeks. It's managed to reverse off there. We're approaching that, which is right about where that 50-day moving average is right now. So, as it continues up, that's kind of the point I'm going to be watching in this short term, see what happens there. If it manages to get the strength to break through, or if we see another reversal down into this wide range, to say the least, that we've had as of there. So, well, that was the things that Fidelity customers are doing today, and a couple things that I had my eye on as well.
Sounds like Fidelity clients fading this big rally in tech, selling Apple on the underlying, and maybe a little bit aggressive on some of the other names, Softy as well out there. So interesting. Fidelity clients maybe not buying this big, broad rally, at least out here in tech. All right. And also joining us, holding down the option pit, land of Carmen, a hot seat. Mr. Meatball, sir, what is lighting up your tape over there with all the crazies in the pit chat today?
I mean, it's basically kind of green across the board. I want to say that this is lining up as a bit of a real breakout relative to kind of the chop we've seen the last few weeks. So, what I would say is if you look at the SPX, we're trading 29.30. So that's not kind of the recent high, right? The recent high is, the high close was 29.38. The high that we've touched was 29.43. The high that we are at right now is about 29.30. But what's interesting is that the VIX is at a new low right now. And so when you see kind of us not hitting a new high and the VIX is hitting new lows, that is telling you that hedges are coming off the table at a faster rate than the market's actually rallying. And there's some belief that this rally could be orderly and have some structure to it. So I see kind of the structure today setting up for potential run to, I don't know, maybe back to 3,000. Who knows? But it definitely it appears somewhat to pretty darn bullish.
So you're feeling the love out here, at least from what you're seeing, what you're reading in the tea leaves out here. The market certainly feeling the love. And that's what we were talking about. It's funny how things can shift on a dime. Just on Friday on Volatility Views, we were talking about how maybe the market seems a little skittish. Maybe we are poised for a little bit more vol rather than less, at least in the near term. And now here we are today, a few days later, and it appears that all is right with the world again. Let's see what's right with the markets today. Trey kind of hit on some of the most active, so maybe we'll start there. The top 10 options, individual equity options, lighting up the tape out here today. He already hit on one. We'll hit on a couple. So we'll hit on the rest. Number 10 of our top 10 here, Bank of America, 103,000 contracts on the tape. Number 9, our old friend Tesla, just a wee bit north of that, 104,000 contracts. Number 8, PCG, 109,000. Number 7, Facebook, $110 on the tape. Number 6, BABA, $153. Number 5, our old friend GE, down to a paltry number 5 here, 173,000 contracts on the tape. Number 4, NVIDIA, the frequently mentioned NVIDIA these days, 176,000. Number 3, AMD, even more frequently mentioned, 181,000 contracts on the tape. Number 2, good old Softy, the one sounds like Fidelity clients are fading, 266,000 contracts on the tape. This is as of a few minutes ago. And number 1, yet again, Apple dominate the tape, 334,000 contracts underway so far today. And Trey hit the nail on the head. The most biased paper we're seeing out there today is actually Microsoft, with about 86% of that 266,000 contracts coming on the call side of the fence. So folks out there liking themselves a little bit of Softy, or at least liking the options on Softy. Sounds like they're fading them out there in good old Fidelity land. I see Apple up about 5.5 today. And let's pull up good old Softy as well to see what we're up to. Up about 2 handles, about 1.5%, up to about 138 and change today. So interesting stuff lighting up the tape out there All right, let's see. Let's keep on. Speaking of what's also lighting up the tape, it is, a lot of macro concerns, a lot of macro interest out there, but there are still micro concerns for those of you out there interested in such things. Got some names popping off before the bell. Tomorrow, got some big ones. Home Depot, Kohl's before the bell. For those interested in those names out there, old friend TREY after the bell. Tomorrow, Wednesday, we got Target and Lowe's. So more retail, more home development type stores out there for you as well. Nordstrom's after the bell on Wednesday. Thursday, for those of you into sporting retail, Dick's is before the bell, as well as BJ's, Intuit after the bell, VMware after the bell, a lot of stuff, Gap after the bell on Thursday. So a lot popping off still this week. If you like those micro names, micro analysis, by the way, of course, all that stuff profiled over there at theoptionsinsider.com. Click on the top options, news, and articles tab, and you'll be on your way to finding the earnings move and earnings move results reports. I got it right here for Lowe's. They were trading, 93.5 coming in to into the time of this report, and they were pricing in about $1.55, which seems surprisingly low given the fact that they've moved in the past about $5.30 or so. So that seems oddly cheap. I'll have to go check in and see what exactly is going on. Maybe you want to check that out for yourselves, listeners. That seems like an interesting one to keep an eye on. Home Depot, they were at 201 before their 201.5 before this report. They were pricing in about 240. That's pretty much in line. They're right around 2.25 for past moves that they've actually delivered. So interesting on the Lowe's front why they're so out of whack. I'll have to go look and see maybe if the stock has changed. Maybe it's split since then, or I don't know what has serious moves in the past, and they're only pricing in $1.55 right now. That seems a bit aberrant. I want to dig in a little more to see what's going on out there. You can find this kind of stuff for yourself. These nuggets and many more. Let's see TREY really quickly. TREY we touched on the network in the past. 57.14 coming into this report. They were pricing in $1.30. Recent moves have been almost $4, $3.92. So maybe by this analysis, Lowe's and TREY, those straddles may be a little bit underpriced. But again, past not always prologue, listeners. Certainly the market not thinking that way here. So underpricing a few of these straddles out here. Let's see, BJ's really quickly, 21.13. They're pricing in 78 cents. They've moved about $0.33 of late. So maybe a little rich on that end. So again, you can do this for days, listeners. Intuit. They're coming out on the 22nd. They're about 267, 268. They're pricing in 4.25. Past earned moves have been almost $10, $9.94. So interesting what's going on out here from a pricing and volatility perspective this year, listener, this cycle, I should say. Check it out. I can get lost in these numbers. I'm sure you can if you want to. TheOptionInsider.com is the place to go. Meanwhile, we got to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird. Time to get funky, because this time, you know what time it is. Time for the odd block. Let's do it. Let's see. And these are fun. These fun little live editions. Well, they're all live, obviously, but live reads. We don't even know what the heck we're going to get. We're going to fire it up, spin the old Eye of Sauron, spin the wheel, see what we get. All right, first up here, we've got, looks like, if it's not a newcomer, we haven't discussed it in quite a while. This is Pivotal Software Inc., ticker symbol PVTL. And they're trading today 14 even on the day here. Don't usually see that on the day. Maybe my platform looks like they are gapping up here today. So an interesting day for them. Oh, yes. Maybe you could see why. Yes, they were just trading $8.30 just last week. And this week now up to $14. So something big is going on. Oh, I see. There were someone deciding they're going to acquire them. Looks like VMware announced an acquisition. Stock up huge. That's probably why we're seeing some weird action out there in the underlying. Obviously, the acquisition price somewhere around $14. hence where we're trading right now. I just ticked down 1398. So these quotes are live. It just seemed odd for a little bit out there. And over the past year, Pivotal has kind of been all over the place. A year ago, they were trading 25.71, so well north of even where they are with this acquisition price, but 3x where they were trading just a couple of days ago. And then they got up to as high of the year, 29.15. Looks like that was around. They flirted with it a couple of times in September, and then again both of them in September, actually. Then they sold off hard in late September, back down to 19.5, so down about 10 handles, I should say. And they kind of vacillated in that 19 range for a while, got up to about 23, almost 24 in late February, and it kind of been bouncing around that low 20s range until late May. Looks like earnings maybe clipped their wings. They went from about 21 and change down to 10 and change in the span of, 3 or 4 sessions here. So not a good run for them, and they were vacillating around that 10 range again, and drifted down to 8.5 until bam, this announcement coming out looks like today of this VMware acquisition. So go figure, they're going to be on our unusual activity. Let's see what someone was up to out here today, listeners. And we've got looks like a Leap long-term trade here in this name, Jam 2021, 15 calls. So these are still about $1 and change out of the money, but someone obviously taking advantage of today's gap up to sell a nice aggressive upside level that was not even relevant a week ago here. I'm interested to see what the bid of these would have been about a week ago, but it's about 20 cents today because that's what they sold it for. These were no bid at 95 cents when this trade went up for 20 cents. So someone found a bid over there on the SEBO. This is clearly opening 12,855 times for 20 cents, Jan 2021. Mr. Meatball, this seems like kind of an old school play, probably got a bit of an underlying holder here, and they're taking advantage of today's announcement. It's also weird to see merger paper be out this far because this obviously should be resolved long before Jan of 2021, but maybe this won't play out. Either way, taking advantage to get a nice little bid here, about 13,000 times here, for these Jan 15s. Is that what you're feeling as well, underlying holder, trying to get a bid to the upside while they can?
Yeah, I'm wondering whether what's the takeout price?
I'm guessing it's around 14 somewhere because that's where we seem to be trading right now.
Yeah, so think about this. I mean, it looks maybe like a merger arb play, quite frankly, is, why would you sell the 2021 15 calls? Because if the merger price is around 14 and change and it's a cash deal, is it a cash deal or is it a stock deal?
I'm looking right now. I don't know.
All right. So my guess is that this is going to come out some sort of cash deal, and that by selling these 15 calls, there's some merger arb opportunity, and or you could be right. It's a long stockholder who sees that, hey, I can still get a massive bid for a year and a half out for these calls that are out of the money relative to the takeout price. Why wouldn't I unload these? So I think it looks a lot like your kind of classic merger arb play, because you're getting to sell a lot of Vega that is theoretically going to be worthless if it's a cash deal. And that's where a trade like this makes a lot of sense.
I just pulled it up. It's $15 is the takeout price, and it's in a cash deal. So $15 in cash.
Yeah, so why wouldn't you sell I would sell the 15 calls at whatever until the cows come home.
Yeah,
especially if I'm long the stock. Unload every single. If I'm long 15 million shares, guess what? I'm going to sell 15,000 of these. I'll sell 150,000 of these calls if you'll give me money for it, because this is found money. This is absolutely a merger arb play.
There you go. That's a new trade for Carmen Line, getting in the merger arb land.
I didn't say it was me.
A new line of business for Carmen Line, merger arb. Both of these companies, by the way.
I think there are plenty of people in the merger arb business.
Don't need more.
I don't know that they need us.
But both of these companies, interestingly enough, both owned by Dell. So a little bit of an internal merger, if you will. All sorts of interesting.
Michael Dell playing the puppet master here.
That guy's got his fingers in a bunch of pies. His venture fund owns a good chunk of the UFC. I mean, he's all over the place, this guy. So he's got some cash to throw around. Let's say.
He is not stupid.
He is apparently not stupid, and we'll see. No one else might not be stupid. Is this guy dumping these calls if it goes through at this price, listeners? And it's two internal companies, so it sounds like it has a good chance of happening. Then, yeah, you're right. A 20-cent bid for those calls, kind of a no-brainer. Let's see what else may be a no-brainer. Let's move on here. I'd mark that one as to be watched, but not going to wait to 2021. And it probably will also be resolved sooner than that, but we shall see. Moving on next, what do we got up next here? We've got another one. We haven't talked about this one in a little while here. This is Centene Corp. There we go. CNC, Centene Corp. This is, if you're not familiar with them, they are an insurance company. Second largest publicly traded corporation based in the state of Missouri. There you go. Fun fact. How about them apples? All right, a year ago they were trading 71.5. Today, not so much today not liking it, but just in general over the past year, the market not liking what Centene is giving them because they're trading 47.81 today, a mere shadow of what they were a year ago. They kind of languished around that 70-odd level till looks like about October. Then they sold off 64. Then they rallied back again, actually, back in early December to 73.5. Then we all know what happened after that in mid to late December. Yep, the sell-off. They sold off to 56.5 there. Then they kind of rebounded early in the year back to 65. Then they kind of sold off again by April down to 47, where they are right now. Then they kind of rebounded a few times up to 56 and sold off again. And then they kind of been slowly drifting down to where they are right now, 47.5. So 52-week high about 74.5, 52-week low pretty much was right here, 48. Just broke through that. Actually, about 45.5. So a little bit south of where we are right now. Let's see what's lighting up the options tape in CNC. Now, this is kind of interesting. First off, what came across our radar, the big print kind of caught our eye of Sauron, which was 12,400 of the Dees 47 half puts going up on the bid for $3.50. These are $3.50 at $4, listeners. This was opening on the Philly. But that one kind of seemed interesting, seemed a little weird, so we dug a little bit further. And we unearthed this other print. Didn't go up marked as a spread, which is probably what threw our initial scan off, but went up at the same time, clearly is related paper. 6,200 of the SEP 50 calls going up for $1.10, lifting the offer. So the ratio works out, the timing works out. If it looks like a duck and quacks like a duck, probably going to be a duck. So it looks like we got ourselves not just a line in the sand puts, but actually a ratio bullish risk reversal going up here, opening on, let's see, the SEP is not opening, though, which is interesting in and of itself. So we got SEP 50 calls going up for $1.10, lifting the offer, and then we've got Dees 47.5 puts opening for $3.50. Worth noting there are earnings after SEP, but before Dees, so right in the middle here, so let's see, October 22nd before the bell. So interesting. It could be also just taking off some upside and rolling out to short puts. That could be as well. That would be an interesting one, but that would be weird. So it looks like we got a time bullish risk reversal, or indeed a bit of a roll out to flipping the script to the downside here. Short calls to the upside here in SEP, then rolling out to short puts to the downside here in Dees. Either way, a bit of a weird one, Mr. Meatball. Let me run that off again for you. Selling 12,400 of the Dees 47.5 puts on the bid for $3.50, and then also buying half that many, 6,200 of the SEP 50 calls for $1.10 here. And so a bit of a time ratio bullish risk reversal, to coin a new phrase, a new strategy here today. What's this one blowing up your skirts here, Mr. Meatball?
Yeah, I'm not sure these calls are a close. Quite honest. Or let's see. Yeah. I'm looking at these calls, and I'm not sure that these are a close. Unless somebody just slowly bought 9,000 of these over, because the open interest was, 8,200 for a very long time, and then now, so I'm only 50-50. These are a close. I'll be interested to see whether someone's really taking a shot, but yeah, it looks like some sort of weird ratio risk reversal.
And it is weird that they were constructed this way. Usually you see the short leg a little bit closer to expiration, the long leg a little bit farther out for obvious reasons, taking advantage of theta and all that fun stuff. They're doing it kind of the opposite way. Tell you what, listeners, this sounds like an ideal candidate for the to-be-watched. This had a lot of things obscured about it that we had to dig a little bit. So an interesting trade here on several levels. The OI obscuring what's going on, and SEP, are they closing? Are they rolling? Mr. Meatball leaning not. It works better, I think, if they're not closing, if they are indeed adding on. I like it better that way. Let me put it that way. So I'm going to put this in the to be watched category. We're going to come back to our friends CNC and see what their bullish time ratio risk reversal, at the very least the SEP leg, what the heck they were up to out there, because funkiness abounding, which we like. We like a little bit of funk. It's good. It's good for the business to have a little bit of funk out there. Let's see if we can find some more funk in our final name, our final victim out here today. What do we got out here today? We've got Revolve Group. This one sounds familiar. I think we've hit on this one before. This one, ticker symbol RVLV, trading today 24.5, up about a third of a buck, or nearly 3%, pretty close to it today. This is another one that has an interesting chart. A year ago, it was trading $10 north of where it is right now, $34. Then it gapped up in June to, let's see, 46, almost 47. They hit their 52-week high a little bit after that, 48.36 in mid-June. So they had a nice run, pretty much, not quite doubling, but up about close to 50%. And then they sold off again a few weeks later, right back down to 34 again. So it's kind of all erased in the span of a couple of weeks. And they kind of vacillated in that mid to high 30s range for a while before starting to drift south here. Just August of this year, they hit 32, then they're drifting down 26, and they hit, looks like around the 52-week low of 22.06, just on the 14th, just about a week ago. And then they've rallied off that since, up to about 24 and change, rallying again today. So been kind of a weird year and some weird time here for Revolve Group. Let's see what our Eye of Sauron dug up here, all this upside, all this downside. Someone scrambling to find a bid here for SEP 17 half puts, going up 7,233 times for 17.2 cents. Obviously some splits. Interestingly enough, there were 20-cent bid at 30. That shows how far you have to go sometimes to actually get some size off. Doesn't sound like that 20-cent bid was good for 7,000 listeners. They had to go a little bit below that. This was a sweep across a bunch of exchanges, including the Philly here, to get all of this done. Another reason why they probably had to go a little bit below, because they had to get all their puts done. There are earnings here, but they're not until November 11th, so not an earnings trade here. And these are, let's see, opening over here as well. So opening, maybe, I don't know, maybe a bit of a line in the sand. Mr. Meatball, what's your spidey sense telling you? We haven't really threatened that 24 handle, even though 52-week low, at least for the past year, obviously, you haven't threatened it, down to about 22 even on the year. So someone drawing a pretty aggressive line in the sand here at 17.5. You think this is someone looking to buy themselves some stock or something else afoot here, sir?
Yeah, this looks like this absolutely looks like line in the sand. Maybe tied to a little bit of stock because the market, this is actually outside of the market. But, this looks like some sort of put tied up with a little bit of stock as a line in the sand. And frankly, this is a name that I really like. The reason why we've talked about it is this is a name that works with big blonde hair. Lauren Sebastian and her blog. So it's one of her retailers.
I knew the name sounded familiar for some reason.
So that's how. So she actually had called the IPO. When it IPO'd at 17, which is where this is kind of set up, gapped to 26 and ran to 40, and she basically had called that. So this is a name that we like, and just Little Bird, it's a name that we're looking to maybe add a little bit here in add a little bit of exposure to, a little bit more exposure, in the Sebastian household, the big blonde hair portfolio.
Uh-oh, the big blonde hair. If you want that fashion affiliate marketing, Revolve may be the place to go. The Meatball certainly liking it, adding some to his portfolio. Maybe you want to add some, maybe you want to just check out these puts. Either way, check it out for yourself. And perhaps check out a little bit of our unusual activity over there while you're at it. Meanwhile, we got to keep on rolling, though. Trey, on this crazy day, has gamely volunteered to dive into the hot seat for a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, let's get to it. Trey, these are interesting times. Some might say they're scary times. We're up, we're down, dogs and cats living together, mass hysteria. I can understand why someone might be spooked by these markets. Maybe they want to head for the exits. Maybe they want to use options to help them do that. Trey, if they were so inclined, sir, what should they do?
Yeah, great question. That's certainly been the sentiment here lately. We had an interesting market. And usually when we begin to sell off, a lot of the clients that we talk to here on the strategy desk immediately, call in, hey, how do we hedge? How do we put on hedging strategies? But this time it's been a little different. We had a lot of those calls, but now we've gotten this kind of sideways action. It seems like every other day we're getting a big swing one way or the other. So a little bit more uncertainty out there than usual. A lot of the clients that we, talk to here are, already long stock, in some capacity with the majority of their portfolio, and using options here to help them maybe manage those positions here along the way. So, when we're talking about the current market environment and, you're looking at a long position, you have some uncertainty. One of the things you start to think about is, hey, what's my exit strategy? Maybe I've gotten to a position where I'm being a little bit too aggressive. Maybe I've just, taken a little too, I've got sitting on some good gains, want to start planning for the end of the year. But rather than just selling, what are some potential, strategies here for us? So, on our strategy desk, we always like to think about your outlook first, right? What's your outlook on price, time, and volatility? That's going to help us determine the right trade in a given environment. So if we're thinking about price, a little bit uncertainty here, maybe staying in this sideways range. If we think about volatility, we talked about VIX coming back here a little bit today, but, right now just below that 17 handle, still pretty high, here overall, right? Our lows around the year kind of going down to that 12 level, so still a little bit of an elevated volatility. Hedging begins to lose its luster with high volatility. We talked about maybe buying puts as a potential exit, but that, may be a little pricey for you here as well. So this leads us kind of the old tried and true covered call strategy here that I know many of us are probably very familiar with or got their entrance in it. But a lot of the clients we talk to, use these covered calls for generating income. But I like to kind of use this time just to, remind everyone, hey, this can also be a potential exit point here for you as well, right? We have higher levels of volatility, selling options, right? We might be looking at a little bit more juice than we usually are. If we think volatility may begin to come down, certainly works in our favor here on the sell side as well. Now, with selling covered calls, here's an exit strategy. I do like to say we need to make sure we're managing our risk and expectations here accordingly. This is a strategy when we begin to start selling these calls against our positions. Right, we are now limiting our reward in the event that we do pop up. And still taking on that downside risk here as well. So, really what you should be thinking about from an exit standpoint, with this in mind is, how much are you actually willing to sell? Think about it from a position size standpoint. If you've got, 1,000 shares of stock, XYZ company, you want to unload some, decide where you'd like to end up, right? Maybe it's, just selling a couple hundred, maybe you want to half the position, but think about this, ahead of time. Hey, what's my end result? Where do I want to end up with? It doesn't have to be an all or none, right? If you want to sell covered calls on your shares, you don't have to sell all 1,000, right? Maybe you're just doing 5 contracts to potentially take half the position off. But, think about these things, here ahead of time. Decide where that point is and stick with that number here as well. The next thing we want to think about is our strike selection. Hey, we've decided to sell it. We know how many contracts we want to do based on how many shares we want to potentially unload. It's thinking about in, at, or out of the money, right? Now, if you're trading, covered calls, usually from that income generation standpoint, you're usually leaning towards that at or maybe slightly out of the money, right? At the money gives us that benefit of the most time value here in our trade. By leaning a little bit towards out of the money, maybe we have some potential to capture some additional upside if we think the stock may run up. You really want to think about how aggressive you'd like to be, right? How willing are you to close out and potentially sell that position? Usually don't talk about in the money covered calls here too often, but hey, if there's a position you really want to close out and want to capture, going slightly in the money may make sense. We do want to be very careful. If we're going slightly in the money, right, remember when we're selling calls, we're trying to take advantage of that time value. We don't want to go too deep to a point where we're not really getting time value, where it's all intrinsic. So we want to be paying attention to that amount here as well. And think about it from a probability standpoint is usually the easiest way, right? In the money, higher probability of getting called away. more premium, right, out of the money, lower probability of getting called away, right, less premium. There's no 100% right way to do it. Find where your comfort level lies, in that individual position, in your aggressiveness on it here as well. We also want to be thinking about our expiration selection here as well, right? So, selling options, that 30 to 45 day out window, usually a popular area to look, right? It's an area where we begin to see that acceleration in theta. We start to take advantage of that time decay, but also bring in premiums that make sense. But again, here, think about your level of aggressiveness here. If there's a position you're really looking to close out of on it here, you have a lot of uncertainty in the near term. You can potentially look at a shorter term in that type of instance here as well. Longer term has some benefits for us of income certainty. We do bring in more of an upfront premium versus the shorter term. So decide where your comfort level lies here as well. But finally, when we are thinking about this from a position management standpoint, we have to understand, we are in an uncertain point here, but it's entirely possible, right? The market, begins to give us some signs and perhaps starts to work against us. We don't want to abandon our exit strategy, right? With this covered call, we still have substantial risk to the downside in the stock. So even if you are putting on a covered call for your positions, think about potential levels that you might want to close out the whole trade should things begin to slide down quickly. This could be from a technical standpoint. I usually like to find some support levels, here on the underlying, or take a look at the moving averages, right? Moving averages, great indicator for us for not only determining support, but helping us identify that trend as well. Maybe breaking below a potential level, a signal that the trend is reversing, is a sign that maybe this isn't the right candidate anymore to sell those calls to exit. Maybe we just need to sell the stock, close out the calls, and move on to the next one here as well. So, that was just something I wanted to bring up to everyone here today. I know it's a strategy that is used a lot, very common, but I thought this market's been kind of an interesting time to think about it if you're starting to look at potentially closing some shares. But that's what I had for the strategy block today.
One thing I would add to that, I thought that was very complete, nice, and concise. And the only thing I would really add to that would be if, let's say, for example, that you're in a non-qualified account, meaning a non-IRA, and you're looking to sell a stock at some stage, and then you're thinking, oh, man, I got to pay the capital gains on this. Well, one thing you can do is you could potentially sell a covered call in some way, shape, or form and use the extrinsic value from it as a way of paying for the capital gains on it if you get called away. Now, of course, the disadvantage to that is that you'll have to wait until the expiration period's over on the covered call. But it's another way of looking at it to where you're thinking, the stock went from 25 to 30. I got to pay for the $5 in capital gain. When doing so, if you want to maybe perhaps sell a 30 call for $1 and it's still at 30, if you have something that'll pay that much, of course, then it's a way of financing the cost of the tax. Of course, you'll be taxed on the gains on the covered calls as well, because the government likes to tax you on stuff. But one thing that I like to tell people is that it is another way of just kind of financing the capital gain just a little bit, or the tax not just a little bit, or it's a way with which you can take a look at it. So I think it's great, the fact that we have a lot of listeners that like to get into stocks by selling puts. You can also get out of them by selling covered calls.
There you go. A little bit of an exit strategy using options. We got a few minutes here. Let's see if we can squeeze on some of you folks with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. This is where you guys take the reins with your questions, comments. Let's see what we can squeeze in here. Get some quick ones. How about this one here from, I just had it a second ago. There we go. From Adam Sam. That name sounds familiar. I think he's written in before. He wants to know. He says, hello. Well, hello, Adam. He says, I notice interesting option action happening at 1 p.m. Eastern almost every day. Is there a reason known for that? 1 p.m. Eastern, obviously noon Central, lunchtime here in the One Shoe time zone. We parse a lot of unusual options activity. And I have to say that hasn't really come across my radar where I've noticed a big spike. at that exact time. I mean, there's a lot of algos out there driving underlying, so maybe there's a correlation. Maybe they rebalance at midday at that time, but it's not something I've noticed out there in particular. And we do a lot of parsing of option flow. Again, we mostly focus on the options flow side, so maybe there are some underlying spikes that we're not noticing. But on the options flow side, I can't say, noon is obviously noon central, obviously the beginning of the day, crazy stuff happens. The last 10 minutes of the day, we talked about it before, there's readjusting, there's gamma rebalancing, all that good stuff. A lot of crazy stuff happens in the last 10 or so minutes of the day, but noon central, that's not one that's come across my radar. Mr. Meatball, when you're out there hanging with the pit crazies, do you notice a crazy spike at noon central, 1 Eastern every day in options activity?
No, usually kind of the major times are, the first hour, then the European close, and then, the last hour. That's about it. I recall that being, not being particularly interesting. There is, the one thing I'll say is there is a guy that right around 1:30 Central on big up days and big down days. There's been sporadically an algo that will step in and try and reverse the market one way or the other. But I've not seen options activity pop particularly around that time.
Trey, is noon central or 1 p.m. Eastern? Is that a hot time for Fidelity clients? Because I got to say, I'm not seeing. I'm not sure what he's seeing. Maybe that's where the Fidelity pocket of clientele really lights up, sir.
I haven't noticed anything. I mean, the only thing I could think of is maybe traders getting ready for your show here with the option block. Got to get those orders.
There we go. There we go. I like that.
But yeah, haven't seen anything that really sticks out from our end on that time slot.
I will comment that when I've got something really big to do and it's an option block day, I'll put something out there to see if I can make the odd block, and I have yet to do so.
There we go. So maybe, Adam, that's what you're seeing. You're seeing Options Insider Radio Network-driven paper. But outside of that, yeah, I can't really. I looked after your email came in. It's not something I've noticed. And over the years of doing this, it's not a pattern that stands out and doesn't sound like it stands out to anyone else. Maybe you could send us examples of what it is you're seeing. Or maybe you just saw one or a few days that randomly stuck out, but maybe there's not a larger pattern there. But not something we've noticed. Let us know if you see something weird, listeners, as we keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Time to go around the block. Tell you what we're keeping an eye on until the next time we all gather here together on the old network. Let's go back the way we came. Let's start with Uncle Mike. Uncle Mike, sir, what are you watching for the rest of this week on this, so far at least, high BBI start to the week?
Yeah, very much so. Watching the news that we talked about at the beginning of the show, excuse me. Also watching, as well as the yield curve, also watching the metals, in that metals have pulled back today, and curious to see if the metals will proceed forward with an inverse relationship to stocks, or just correlate with them. If the market goes up, metals will go up, and seeing where they're going with it. You'd think that they would probably have an inverse relationship to them because a lot of the rally was driven on some fear. But you never know. We will see where that goes.
Has part of your high BBI been adjusting the silver collar by any chance?
It has not been, unfortunately. I wish I had some silver to report. That would be really fun.
You are dead to me, sir. Let's instead go out to Trey. Trey, sir, what are you keeping an eye on for the rest of this week?
So towards the end of the week, Jackson Hole Symposium, going to be interesting to see what remarks we get from Mr. Powell, anything that might show some additional aggressiveness or not. So that'll be the big thing. And from earnings standpoint too, two companies reporting this week. Want to be keeping an eye out on Home Depot and Lowe's, both reporting on Tuesday and Wednesday. Been an interesting sector. Keep an eye on the consumer discretionary. It's been lagging the last month or so compared to the overall market. So seeing if there may be some signs of turning around here in that area or not. Kind of following in that risk on, risk off here. But those two names in particular caught my eye.
And last but not least, Mr. Meatball, sir, what are you keeping an eye on for this week?
Like I said, I'm watching Home Depot. I'm watching Lowe's. I think those are interesting names. And then I'm really interested in what happens with bonds and kind of how that moves things around, and then kind of where the kind of the next move in the S&P. I'd really like to see us break 2940. If that happens, I think we could run significantly higher. And that's kind of the main things I'm watching this week.
There it is. All right, listeners. Unfortunately, that music means we've come to the end of another epic journey through the world of options. We talked a whole bunch of fun stuff. Hopefully you enjoyed it. If you got questions like Adam and everybody else out there, hit us up. You know how to find us at Options on most of the major social media platforms, theoptionsinsider.com. We have the feedback form there as well. Or just send it the old-fashioned way, questions at theoptionsinsider.com. Hit us up. We'd like to hear from you guys. You guys have interesting suggestions that we love. Before we go, let's go back around the horn. Let's start with Mr. Trey. Sir, if listeners are interested, they want to kick the tires over there in Fidelity land. Where should they go? What should they do?
Yeah, so check out our website. Go to fidelity.com/options. Here you can learn a little bit more about our option trading capabilities and our platform as well. If you happen to be a Fidelity customer already, feel free to give us a call. Ask for me, ask for any of the other guys on the strategy desk. Happy to dive into some more detail, discuss strategy, and let you know about some of the different online classrooms and coaching sessions that we offer here for you.
There you go. Fidelity.com/options is the place to go. Mr. Meatball, if they want to kick the tires and light the fires in the land of the pit, where should they go? What should they do?
Yeah, I have been pretty spot on with a lot of my VIX calls. If we end here, Mark, I'm definitely winning our VOLViews discussion. But I want to say that, go to optionpit.com/Kramer. You can get you can watch my latest work I did for Jim Cramer. You can get our VIX primer, a month of the Vol newsletter, a month of Option Pit Live, and a 30-minute one-on-one session for me for $97. And on a personal note, Lauren at Big Blonde Hair and myself are now doing a husband-wife podcast called Passion Couture.
Cash and Couture. We broke up a little bit there at the end, Mr. Meatball, but Cash and Couture is the podcast. He's horning in on my business listeners. Go ahead, give him some love if you feel so inclined. By the way, I should point out, Mr. Meatball, you may be lower on the VOLViews pick, but that's because I forced you lower, because I went at an 18.5, and that was, as you said, what you wanted your pick to be. So I forced you lower. So therefore, I guess tangentially, at least so far, the victory is really mine.
Yes.
Yes, like my circuitous logic. How I got to. We got a whole week to go, so we shall see who is winning. And who's winning? Uncle Mike's always winning over there in the land of St. Charles. Uncle Mike, if I want to join the winning team at stcharleswealth.com, where should I go? What should I do?
By all means, go to stcharleswealth.com. Kick the tires and light the fires, as Mark Longo would say. Feel free to contact me if you're looking for an advisor who has a lot of fun on days like this when he's not in pain because of his bladder.
All right, everybody. Well done on the show today. Good job. You out there listening, too. Good job to you. Give yourself a little pat on the back. Well done. If you're intrigued, you like what you hear, you say, I need more, we got you covered. We'll be back in about a little less than an hour, 57 minutes, for talking some crypto vol and unusual activity, all that good stuff. We got some great guests to help us do that. In the meantime, of course, we'll beam some fun stuff in if you are listening live, and we'll be back in a little less than an hour to talk up term structure, volatility, skew, all that good stuff in the land of crypto and beyond. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.